DTN's Todd Hultman is our corn and soybean market analyst this week. The U.S. Department of Agriculture said Wednesday in its latest supply and demand estimates, competition from Argentina and Brazil has reduced its outlook for American soybean exports. In September and October, the first 2 months of the marketing year, U.S. soybean shipments were about 6% lower than in 2016. American corn exports have had a very sluggish start to the marketing year, with shipments down nearly 37%. That includes a sizable drop to one of the most prominent buyers. We talked with Todd at DTN's offices in Omaha Wednesday afternoon about the struggle for foreign demand, South American production, and the latest supply and demand numbers.
Well, the December report, we usually don't have much expectations for a change in the numbers, and that pretty much held true. If there was one little bright spot of hope, it came in the ethanol demand estimate. They increased 50 million bushels for corn, so that brought the corn ending stocks number down by the same amount. Other than that, though, we still got big supplies of corn, big supplies of wheat, and our soybean situation seems comfortable right now. The concerning part of yesterday's report, and we've known this from tracking exports week by week, was that they brought the export estimates down for both soybeans and wheat.
So if we stay in that corn ethanol arena, how closely is the corn market following the continuing discussions about the RFS and potential reform to that or the RIN?
You know, Jeff, that is an issue, but right now I would have to say the market's not that complicated, or at least the market players probably aren't thinking ahead that much. We've got that concern, we've got NAFTA concern, but both right now I think are just being outweighed by the sheer volume of corn stocks and supplies that we have on hand, along with a very low export pace. So it's very hard to even imagine those scenarios beyond what we've got right now.
You mentioned the soybean export number. Are we worried, given this is the time frame where the U.S. should capitalize with South America starting to run out of beans?
Yeah, this has been a bit of a riddle to me in that our FOB soybean prices are significantly cheaper than Brazil, and yet Brazil has continued to aggressively export their supplies. Now, their ending stocks, as estimated by USDA, aren't very much when they get to the end of their local season at the end of January, about 145 million bushels. That's not much, but of course, they always skate by on that because they come through with a big crop in the next season. So far, it looks like the weather is good enough to support another big crop in the new season. So right now, there's just no major threat on soybean prices.
Let's talk about corn exports. One of the large buyers for U.S. corn has been South Korea over the last couple of years. Since July, they've been a very minor player. Why?
Yeah, it all goes back to earlier this year when Brazil and Argentina had big corn harvests. And right now, the exports from South America are beating us out of those Asian nations. So that's really hurting us. We're seeing that definitely in our corn exports down 30 to 40% from a year ago.
In North America, though, Mexico has held strong. Is that surprising?
It is, but you know, why not take advantage of it when you think of it from their point of view? We've got cheap supplies right now. Who knows what's going to happen to the NAFTA agreement, so why not take it now while you can?
You wrote earlier this week for DTN about the commodity markets in 2017 and which markets did well and which markets didn't, and you said that corn and soybeans might be set up to do better next year in 2018. Why is that?
Yeah, now this is not based on any fundamental foresight that I see tighter supplies ahead or anything like that, but you know, the fundamentals explain about half of the changes in the corn price, and then the other half is left to uncertainty, and part of that has to do what's going on in the rest of the commodity world. So often we've seen there's a correlation that the commodities that do poorly one year tend to do better the next year. And we've just seen that time and time again. I think it's a psychological factor of the market more than anything else.
For the farmer holding corn or soybeans right now, what do you think is a realistic rally or a realistic price that they can try to target here a few months out to get rid of some of this?
Yeah, well, it's obviously a very tough spot we're in right now. Just looking ahead, there's nothing fundamentally happening to believe that prices are going to get much better. But seasonally, we do see some appreciation in both corn and soybeans between now and early summer. So it's still very possible that we could get a 30-cent per bushel gain in the cash price of corn and a similar appreciation in soybeans. A lot of that also, though, is going to depend on how South American weather comes through in the early part of 2018.
And hand in hand with that conversation is probably the question about whether or not basis can improve at all for the farmer.
It can, it should. We'll just have to see if it does. We have started to see a little bit of improvement in the cash corn price relative to the futures, but really nothing to brag about at this point.